In this video, I'm going to be talking about how to actually time your capital raise and give you some thoughts and some insights around how people are currently doing it at the moment. More than that, I'm going to sort of go through some of the mistakes not to make. If you like this video, obviously like it, subscribe to the channel, and also share it with other founders which you think that may find this of use. So I was chatting with a founder, and this is obviously what prompted this video. I was chatting with a founder the other day, and basically they'd reached out, they mentioned they wanted to raise capital. So having a discussion, my first typical question is, okay, so when are you looking to start your capital raise, right? And the first comment that came back from the founder is, oh, we're thinking about starting in 6 months. Now we're sitting in the first week of July, second week of July. And I was just sitting there going, okay, so you're looking to start your capital raise around New Year, Christmas and New Year. And you can see that the sort of blank expression on the face where they weren't sort of quite sure that was obviously the right thing that they were thinking. It's like, well, firstly, no one really kicks off a capital raise to Christmas or January or the first week of January. And so as I started digging, I kept on asking a bunch of questions. So then I tried to lay it out so that they understood what some of their own thoughts were. So I basically re-highlight. So if you're thinking about starting your capital raise in January, typically you realize that most people are away, especially from an investor perspective, that most people are away until the end of January. And most people are actually quite inactive until the end of January because they've got kids, they've typically got their families, they're on holidays. Now, whilst they'll still open emails and so forth, getting a deal finalized is very difficult. You may be able to start interactions, but it makes it difficult. So then I started breaking down the maths of their structure. So you're looking to kick it off in January, okay, which is typically a little bit harder, possible, but harder. You can start conversations around that time. Secondly, we find that most companies we work with typically take anywhere between 6 to 12 months to actually raise their money. So am I right in saying that you're not looking to complete your capital raise until this time next year, or potentially understanding how the markets are and understanding also there's been very well sort of documented that it's going to get more and more challenging to raise venture capital, that you're sort of expecting to close your capital raise by December next year? And you just see this look in their face where they just look completely shocked, like they didn't quite understand it. And so for me, it's a common question that investors have. In your mind as a founder, we've all got ideas of we have that sort of natural thing that when we start the raise is actually the same time that we're going to be finishing it. This is not accurate. So one of the feedback and guidance I'd love to provide is that the answer to the question is when you're going to start the capital raise process, the simple answer is now. The common philosophy we have is always be raising, right? And does that mean you need to be always taking money into the company? No. Basically, what that means is you need to be speaking and having conversations with investors now. We just went through the process of a capital raise ourselves, and from the outside, it looked like a sort of quick allocation or a quick where we sort of basically are raising $2 million for WI, and it looked like it was a quick process from the outside. The reality is, I've actually been working towards it for 18 months. Right, and there's still another component to go. And when I say working towards it, I'll do another webinar sort of at another time. But there's a couple of things which I want to highlight to you as a founder going forward, especially when you're going through the capital raise process. The first one is the two things which motivate an investor to move. There's only ever two things. One is an offer, right? If you do have an offer that is on the table, that is in front of them, that can motivate them to move or to make a decision in some way, shape, or form. Without an offer, it's just a conversation, it's a get to know you, it can still be just as useful. That's completely fine. Now, there is a stage for having those getting to know you conversations, and I'll explain that in a second. The second thing which gets an investor to move is typically the achievement of a significant milestone, right? So we're always encouraging private companies and early stage venture companies to basically announce their significant milestones. What happens to us too much as founders is we have great things that are happening in our companies, but we're telling no one about it except for the people involved. So we're getting excited. We know everything that's happening in a business, but we're not communicating it to anyone, right? And there's always a saying in marketing, it's about that sort of that job of how you go from unknown to known with a potential investor is just consistent and repeating of significant milestones which allow them to know that there's been progress taking place in the company. Now, In that, so there's the two things. They're the two elements which motivate the investor to move. Firstly is an offer. The second thing is the achievement of a significant milestone. Now, there's three other elements which I think are really important. Okay, so the first one is you need to allow enough time and space to build like, trust, and respect in your company, in you as a founder, in your leadership, and also with the achievements of the business. By doing that, you're allowing the investor to get familiar and comfortable with your business, right? You're making it easier for them that when it comes time to make an offer, you're making it easier for them to make a decision, right? So first element is allow enough time and space to build like, trust, and respect. The second part to that is there needs to be an alignment of thesis. So when you're having the early discussions with investors, what I did for a long time was I had lots of conversations with investors. Some of the conversations with investors that had zero interest in investing into my business. I would ask them why. I would try and understand it, right? I would understand what their thesis was going forward, right? Because it's really important that typically I found it very difficult. I find it's very unlikely, in fact, that there's going to be any sort of investment from an investor if there's not an alignment of thesis as far as what you believe about the opportunity, the problem in your specific sector or what you're targeting, and also the opportunity in what you're specifically targeting. If you have alignment in that, that's really sort of taking out the first, one of the first two challenges of that, like, trust, respect, and then alignment of thesis, right? So they're the first two elements. There is a third element, which I find quite interesting. And, this is sort of commonly seen in the marketplace, and that's typically co-investment opportunities. Co-investment opportunities, and even sometimes for some investors where they've been looking for a specific type of opportunity in a certain sector, often it's the serendipity factor, where they feel from their minds it's the right time, the right place, and the right opportunity to make an investment. Right? So that's more around, I said, it's more around that like, trust, respect is already established, or in the data that you're supplying to them, the information that you're supplying, they're seeing the kind of metrics which are in alignment with their thesis and also what they view as growth going forward. So they're the three elements. So I'll just repeat them just to finalize the video. Firstly, allowing enough time and space to build like, trust, and respect in your team, your offer, your company, your progress, etc. The second element is an alignment of thesis as far as what you see as the problem in your ecosystem or in your sector, and what you see as the opportunity in your sector, and the way why you're the one to solve it and the way you're going about solving that. And then the last one is more aligned to the co-investment is there's an element of serendipity in the way in which you've actually come across, in way which they've come across the opportunity or come across your business. So I hope that's helpful. I said the timing of a capital raise is something, I know as founders, we're just consistently sitting in our heads thinking about how we're strategizing things. But I hope that really helps. And I said, if you are thinking about a capital raise in the next 6 to 12 months, the time to start raising and start having conversations is right now. Thank you.